In this video, traders, I'm going to talk about the transition from range bound to trending and vice versa. Hey traders, a very warm welcome to you. Alright, so the transition from moving from range bound conditions to trending conditions. I think most people who have subscribed to the channel, watched my videos and stuff, know that I'm quite a big fan of implementing the right strategy or the right tool for the right environment. And guys, this is from being burnt many times before, kind of finding my own feet and then recognizing that actually, you know what, if you've got the right strategy, it's not enough. You have to plug it into the right conditions. If I'm trading mean reversion, I'm going to get run over and stamped on if I'm trading in a trending environment. If I'm trying to buy pullbacks in a mean reversion environment, again, I'm going to get stopped out. So you can have the best strategy in the world, and the danger we have is that we use the wrong strategy for the wrong market environment, and then we end up thinking the strategy is not working. No, the strategy is super effective, it's just we're using it in the wrong conditions. So with that being said, and assuming we're all on board with that one, how can we move from range bound to trending? So first of all, we need to identify when that's happening. So we're looking, the can't be eyeball, guys. You know, I'm a big kind of see what I want to see fan, or see what I want to see. Enjoy looking at the actual charts and making my decisions based on what I'm seeing. My intuition, it's just the facts in front of me. I know a lot of people like to quantify that with indicators and this and that and the other, and I get it, and I've put some of these in there as well, but you can't beat kind of just looking at a market and going, we're now in a range bound environment, we're now in a trending environment. You know, sometimes it's more obvious than others, but very often, you know, for example, some people might say this is a trending environment. Right, if I said to you the price has gone from here to here, you're going to say it's a trading environment. But if you then saw the price doing this, now that may well be a trend, but to me it's more like range bound, because even though, I mean, let's assume that's over a several week period, you know, we've got, we're bouncing off highs and lows, and we're not really kind of grinding up here. That's more of a trend to me. So even though, yes, it's an uptrend, you can still say, well, it's range bound because actually we're playing mean reversion here. You know, we've still plenty of opportunity going counter trend back to the middle of the range, the mean of the range, or buying here. We're looking to come out here because very often you get this kind of stuff at the bottom before it pushes up. So, you know, sometimes it's not completely black and white, but sometimes there's a grey area. Anyway, let's go to it quickly. Eyeball. So I want to look at eyeball. I want to say if it's trending or range bound. Another thing to do is oscillators. Oscillators are really useful, guys, because very often in a trending environment, you're going to have an oversold, an overbought condition that stays there for a longer period of time. Range bound environment, obviously, more likely we get overbought, comes off overbought, oversold, overbought, oversold. So that's a good tip. RSI, stochastic, CCI, those kind of stuff. Gaps. So if we're trading a product that gaps, very often when we're in a trending environment, we get gaps that don't get filled, or they sort of get filled and they carry on back to highs again. Range bound environment, gaps are always reversed. You know, we very rarely get gaps, because range bound environment generally is, you know, no one's really putting their chips on the table, no one's really getting that excited about stuff. So gaps are often a sign of a trend. 4, number of prior highs, lows taken out. Pretty obvious, but if we wanted to quantify that, perhaps wanted to put it in an algo, that'd be a good place to start. How many highs or lows have been taken out? So, you know, range bound environment, you might get a high taken out, but then intraday it might come back, or the second day it might come back within the first day's range, or on day 3 back into the first day's range, that kind of stuff. You're always kind of retracing where price has been. Even if it kind of plods up, it tends to do that. Whereas if you're talking about a trend environment, obviously highs get taken out, and very often they don't get retested. And the next day. I mean, that might seem obvious, but it's a good place to start. Number 5, series of red or green days. Pretty easy, simple thing, but very often we forget it. Grubby candles like red, green, couple of green, red, green. That signifies range bound chop type of day. Trending environment, always more than likely you're going to get kind of many candles in the same direction, a couple of reds, and many greens. Often you get kind of 15, 20 sometimes greens. Anyway, so that's how we're identifying it. So when we're moving from a range bound condition to a trending condition, these are changing slightly. So we often go from trending and then we range for a bit, then we trend and we range for a bit. And that transitional period can be challenging to trade because we're in trending mode, we're like buying pullbacks, all of a sudden it's dipping, it's staying low. What we want to try and do is, I mean, for me personally, guys, I can't beat this. You know, I'm looking at a chart and I've seen a trend up and then I see kind of it trying to do this and oscillate around. And yes, theoretically our uptrend's still intact, but if I'm trading this environment, that's a week worth of trade. For me, I've got to switch very quickly to range bound conditions. Very recently, we've had an aggressive down move. We've sat in a range for a week while waiting for news, but it's going to break out at some point aggressively. It actually did, but the point is there's counter trend trades to be had within a broader trend, so it becomes more of a range bound environment even though you're in a higher trend. So eyeball, what we want to see now is what happens when highs are taken out and it's retracing. That's the biggest key, I think, for me, is that in a trend environment we tend to not recurse or come back too far into the prior action once we've taken out high. We tend to get more fake outs. So I bet if you were to statistically kind of look and count the fake outs versus the breakouts, it wouldn't even be that, would it? You would probably notice that you get a lot more fake outs. So when you start to get those conditions, you want to be careful about buying your pullbacks. You want to be more mindful of trading mean reversion. However, what I do, which works well for me, is I will trade mean reversion, but I won't trade counter trend. So I might say, okay, well, listen, I want to trade when we're at lows here. I'm not going to look for a break to highs because I feel we're in a range bound environment on this week, but I am going to look for kind of flushes to lows for a move back to a mean, whether that's an intraday VWAP, whether that's a midpoint in there, rather than a trending environment where I expect it to go to a fresh high. So I'm going to still kind of use a hybrid of the two and say, well, I'm uptrending, I want to stick with longs because even though we're in a range on a week or on a monthly uptrend, and use it in that way and say, okay, well, mean reversion, but to the long side, align myself with the trend, but trade mean reversion. And when we see that transition of highs made, highs made, highs made, highs made, and very often, guys, as well, you'll find that the moving averages go relatively close to the price. Don't never get too far away in really trending environments. Of course, if it's an aggressive trend, then they do, but chugging kind of trends, moving averages catch up very quickly because obviously the way they're calculated. Range bound environment, you find the moving average crossed over many times in the week or in the day, and that's something else can be a warning sign. It's like, okay, well, we might be in a range bound environment now, we might be in a trending environment kind of after we've broke out clear of this. One final thing, guys, is to note, don't discount the days of the week. Especially a day trader, look and say, well, actually, it doesn't look that significant on a chart, but actually, it's the whole week has been in a range. Monday, Tuesday, Wednesday, Thursday, Friday has been in a range. And look at what point, and also look at the point in time that perhaps there's news. So let's say you had Fed or an on-farm payrolls come out. What have we done since that? Because that might be the catalyst that changes conditions, and very often that will be the key that says to you, right, I want to switch now into a range-bound trading strategy. So I have Fed, have non-farm payrolls. Well, actually, since then we haven't quite broken out as aggressively as we had before. Since then we're kind of testing lows, right? Maybe I need to look for mean reversion, but be cautious about what I'm doing because since then it looks like the dynamics change. There's nearly always something, guys, that is a catalyst for change. It's either going to be a fundamental thing like that might affect the currency pair you're trading, the commodity you're trading, or a technical thing, i.e. it's taken out a high, it's pulled back from that high, and since that point things have just changed. There's nearly always something like that. So that's kind of where I go with eyeball, because sometimes you can't quantify and qualify it, but very often you look and you go, actually, since we took out that high and we pull back from it, the conditions have changed. We've not been in the same type of environment. So I'm going to trade the environment I'm in until that happens again, i.e. we take that high out again, so I can be sure to stay within the conditions that we're in. So anyway, guys, it's tricky moving from range bound to a training environment. Yes, we know use different things. I like eyeball, and yes, it's maybe challenging to say what we're looking for, but if we're looking for things like we've just talked about, if we're helping ourselves with the oscillators, the gaps, number of prior highs, number of red and green days, at least we can align ourselves. We're never going to completely insulate ourselves from the trend change or the environment change, and it's going to change, and we're going to get caught out from time to time using a trend type. Even in day-to-day, guys, you might be in a trending environment and you're trying to trade, breakout, pushes to highs, and then the day becomes a range day, which is why very often we want to also look to see the patterns from day to day to day. If I had 2 trend days, maybe we don't want to be too aggressive on the 3rd day. I want to look for a range bound day. And just also recognizing those are the biggest shifts we talked about there. Just very quickly, the kind of smaller shifts that go within the bigger cycles, if you like. So within the uptrend, you may well get 2 or 3 days of kind of breakouts to highs and chugging along, but you're going to get one day that's a narrow range. It's kind of hugging around the VWAP. It's doing a doji type day. It's going to push to highs, push to lows again, back to the mean. And so being able to transition, even though you recognize you're in a broader trend, but knowing, hey, well, actually today might be more of a range bound environment, might be more this, and understanding that you can't always just be plugging away with your strategy. Very often you've got to either pull it out or use something different, and just recognizing the theme and flow of the market, trying to get in tune with the market, trying to understand how it works, who's doing what, who's on the other side of the trade, who's on the other side of the deal, what does it want to do today, how's it opening, how's it closing, all this kind of stuff, which is why I'm a price action guy, because that helps me guide me personally each day I want to take a trade. Anyway, guys, that's moving from range bound to trending environments. Take care, see you in the next one. Bye bye.